The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies. Welcome to Tokenization Talks powered by Arca Labs. I'm Annelise Osborne with Arca Labs. We are focused on innovating responsibly. We're excited to bring you institutional thought leaders in the digital asset space. Our guest today is Rob Frasca, who is co-founder and managing partners of Cosimo Ventures. Cosimo Ventures is the first tokenized evergreen venture fund. Rob, thank you so much for being here with us. Really appreciate it.
Great to be here. Yeah,
Thanks.
Thank you. Thanks for having me.
No, well, thank you. Thanks for all the innovation that you're doing in the space. So the talk of the year, I feel like, is real world assets for tokenization, and also what people are really looking at tokenizing as funds. So it's super exciting to have you on and hear about kind of how you got into tokenizing your first fund. And if you could just kind of walk us through the thought process and how you started.
Yeah, so Cosimo Ventures is an early stage holding company in the blockchain market. We actually started back in 2014 as a holding company, and we're a collection of entrepreneurs, successful serial entrepreneurs, going all the way back to the .com days. And we decided to create a company to help other entrepreneurs grow their businesses. And when blockchain emerged back in 2016, 17, we quickly realized that this was, I always say, one of the largest value creation events, single largest value creation event in our lifetime. So we decided to go after it and really start investing in that business. And we decided to create a fund to look at early stage blockchain investments, both on the token side, the illiquid token side, and on the equity side. And we decided to tokenize it. And this was 2-3 years ago. So it's kind of funny, actually. I was an EIR over at Highland Capital. You can imagine, with my career as an entrepreneur, got a pretty big venture capital network. And all my friends were like, what are you, crazy? It's hard enough to raise money, let alone tokenize it. But our mental philosophy was that if you're going to invest in this space, if you're really going to be in this space, then you kind of have to eat your own dog food. And so you kind of be in it. And so for us, being pioneers in the whole tokenization side of the business, and we did it through Securitize, I think we were their first paying customers. They did Spice before that. But, our mentality was, you got to know the workflow, you got to know the issues, you got to know the technology, you got to know the ecosystem. And what better way to do that than tokenize it? So we tokenized the fund. It is evergreen. There were others that tokenized their funds. I think Spice did it. Blockchain Capital did one. I think we're maybe number 3. But we decided to go after kind of an open-ended evergreen structure by tokenizing it. So, today the fund it's small. It's, around 30 million, but it is evergreen. We're always bringing in new investors into the fund. And we learned quite a bit, from compliance to regulatory to workflow, tech, et cetera, in doing that.
So what did you learn from, I guess, compliance and regulatory? I guess, what were your...
Yeah, when we first, it's kind of funny. My partner, Kieran Hines, he's on the, he's also a serial entrepreneur, very, very, very capable operations guy. When we first started this, what we realized is the lack of legal talent, right? Just people weren't up to speed. They didn't know, how do you do this? And so there was a very collaborative kind of environment I actually joke. I said, Kiran, the lawyer should have paid you for the education versus us paying them. But we went through a lot of legal firms, a lot of lawyers as we kind of, looked at tokenizing. In fact, I think we use Joel Telpner now out of Sullivan Worcester. Very capable guy, knows the market, knows crypto, knows digital assets really well. And it's kind of funny because what you need legal on the fund side, right? You need kind of a fund council, and then you need this kind of crypto digital assets tokenization council as well. And the two generally don't, they're different in a lot of firms. And so for us, it was really about how do we structure this? How do we handle different investors from different jurisdictions? And how do we create a structure and system that accommodates all investors, accredited investors from different jurisdictions. So it was quite an interesting process to say the least. I think now it's pretty turnkey. I think now, when you work with firms like Archax, London, which we made an investment in, or Securitize, I think they've really got it figured out. They understand, the compliance issues and the legal issues and the structural issues. Whereas, when you're a pioneer, you're figuring it out, right? And I think the good news is you don't need to figure it out. It's been figured out, and now it's just implementation.
So is this fund any different than a non-tokenized fund? Like, what's the difference that you'd find for another one of your funds that's not tokenized versus this tokenized fund?
Yeah, it's interesting. So when I started pitching the fund and raising capital for it, the presentation was all about tokenization. And what I realized is nobody cares about tokenization. What they care about as investors is, what are you investing in and what kind of return am I going to get? And how liquid is it? And so the way I pitch the fund today is I don't even really talk about the fact that it's tokenized. I basically say all tokenization really is a digital share. And what that digital share allows you to do is trade it on a secondary market, and it allows you to use a smart contract to essentially affect the economics of the fund itself. Interesting. One of the first big institutions that came in the fund was Rochester Institute of Technology, RIT. And the first thing they said was, we don't want it in a token. Can we just hold it in paper form and you guys hold the tokens in treasury? And then when we want the liquidity or we want to utilize the tokens, we'll go ahead and do that. So we actually, our fund, I would say, of all of the holders, the majority, well over the majority, don't even hold the token.
That's interesting. That's one of my questions further on is about your investor class. But first on the structure. So you did not have regulatory hurdles, or it was really just understood?
Yeah, we did. It was just we had to figure it out. It's a Reg D 506C fund. We have 2 feeders for the fund. I'm actually the wrong guy to be on this call. If you want to talk about structure, you should get Kiran because he's the master. But basically, we created a set of feeders into the fund. It's a Cayman fund, and like I said, Securitize does the minting, the KYC, the AML, the whitelisting, and the transfer agency on on the fund. So it's fairly straightforward now. But when we were really setting it up, we had to kind of really understand, okay, which structure does it fit in? But that's essentially how we do it today. Nothing fancy.
So I get a lot of questions on NAV. So if you have a fund and it's traded daily and the NAV would readjust. So do you have any comment, like how is your NAV calculated? If it's trading on a secondary market, does that affect anything for you?
Yeah, so let me answer the NAV question, but I think there's a higher level kind of thought process that you have to take. So we post our NAV quarterly. And then and what we do is we basically mark to market the portfolio, and then we post the NAV quarterly. What's important to understand, I think, when you tokenize is what's the liquidity of the underlying thing that you are tokenizing. So, for instance, I actually believe that the killer app right now for tokenization is really the issuance. So I think the industry as a whole tends to get a little wrapped up in the secondary market and the secondary liquidity, because ultimately that's kind of like the holy grail, right? That's where you want to go. But I think what it's really about right now is bringing in a new class of investors to an asset through the issuance of the token. I feel like the secondary markets are a ways away, a couple of years away. It's going to take longer to really build that. So for us, when you think about a venture capital fund, it's not really liquid asset, right? Most venture capital funds are locked up 10-year J curve, making capital calls first 4 years, harvesting on the back end 5 years. All we're doing is bringing in a little extra liquidity on that. But we don't promise, we don't even really talk about secondary market liquidity because there isn't any. There's very little secondary liquidity on the market. So for us, it's really more about getting the issuance. And I think I can't speak for KKR, can't speak for a lot of the other folks that are tokenizing, Aberdeen and Hamilton Lane and some of these other guys that are tokenizing their funds. But I feel like, step one is let's just talk about issuance here. And let's work through the workflow of issuance and bringing in a new class of investors. And then I think as that marketplace of products that are tokenized grow, then kind of step 2 and 3 is looking at the liquidity of it. And the reason I brought that up is because that's the NAV conversation, right? The NAV conversation is, what's the NAV and how's it posted and how's it traded? And I just feel like the market is too early for that.
Understood. Sure. So what about capital calls? You mentioned capital calls. In a tokenized fund, how do you deal with capital calls?
So we don't do capital calls. So in a tokenized fund, what happens is people put their money in, they're buying their tokens at whatever the NAV is, and that's it. And so what that does is it gives the investor flexibility to say, okay, I'm going to invest X in the beginning, and then I'm going to see how this fund goes, and I'll be bringing more in later as the fund grows. So it's a different mentality than traditional venture capital investors are used to. Whereas I'm making a commitment upfront, and then you're going to draw it down over time. Here, you're just buying in at that given time.
So with that, when you had the initial investors in the fund, or even investors today, is there any concerns because that structure is a little different? Do you find the same people?
Yeah, it is. It's harder to explain. It's harder for people to get their head around. And some investors just say, no, that I don't understand it, or I don't want to be in that kind of structure. And they say, I don't really want to be in that structure. Whereas other investors say, yeah, look, I want exposure to this early market. I really want to come in. You guys have done some incredible deals here. And, I think we did about 25 deals over the last, year and a half. And I want exposure to it. So it's really, we're learning as we go in terms of what tokenization is and how it works, and what structures it plays to. Incidentally, we have a hedge fund that we just launched. It's called Cosimo Y, and it's a fully liquid 30-day notice, 30-day liquidity fund. It's really designed around being a hedged proof of stake fund, top 20 proof of stake digital assets. And what we do is we have a nice diversified portfolio of top 20. We stake them out to a world-class staking provider, all institutional class. Figment we use. We use a world-class institutional class custodian, and then we provide a layer of hedge. So the investor can say, okay, I want to be 80% hedged, I want to be 50% hedged, or I want to be 0% hedged. So they can allocate in those three buckets. And then every month we do a digital yield. The investor can take the yield in cash, or they can compound it. We launched that fund and we didn't tokenize it. We decided to just go traditional old school hedge fund. And we're out raising money for it, and it's a $200 million fund, and it's going pretty well given the market conditions today. But what's interesting is that we're actually getting a lot of people coming to us saying, well, why don't you tokenize a sleeve of that, so that we can take that sleeve and bring it to a different class of investors, and so that they can enjoy that fund. And I feel like having a liquid kind of daily NAV type of fund is more conducive to tokenization than, say, a venture fund is.
So what are the benefits that you have had with this being tokenized?
I think ultimately the long-term benefit promise of tokenization is transparency. Number two, liquidity. Number three, access. And number four, speed, right? The ability to settle these things at a very low cost, cross-border. I think that's the ultimate promise here of what tokenization really offers. I personally believe everything's going to be tokenized. I don't even think you're going to even know the word. I think the average person isn't even going to know what the word is, tokenized. They're just going to hold digital shares. And it's really about how those digital shares are settled and transferred. You can bake in a lot of that whitelisting and compliance into that tech. And I think that's the long-term kind of promise of that. And ultimately, I think that's where everything is moving.
So if you had to do it again, would you do it the same as that same tokenized fund? Was it more expensive as well as a regular fund?
Yeah, it was. It was more expensive. It's definitely non-standard. I definitely feel like because we were pioneers, it's harder to raise money into that vehicle. And again, you got to understand that we did this 2-3 years ago. Can you imagine 2-3 years ago? Would I do it again? Yes. And the reason why I would do it again is because for us as a firm, our intent was to learn this market, understand that market, and quite frankly, become experts in that market. What's interesting is that all of a sudden, and I would say it started in September, we're getting phone calls left and right from big name firms who are saying, hey, this is happening a lot faster than we thought it would. And can you help us? And can you come in and talk with us? And, and these are big, 100, 200, 300, 400 billion dollar firms, household names that are saying, come on in, talk to us about what you learned, how you're doing it. What do you think we should do? And we're not a consulting firm, right? That's not our business. But I feel like from a tech adoption perspective, the institutions, the bigger players are now realizing the capabilities here of tokenization, right? One of the things I always say, a lot of people say, oh man, FTX and all this stuff and crypto markets are down, and there's all kinds of fear in the market and all that kind of stuff, right? And I always first of all, I always point out the old Warren Buffett quote, right? Be fearful when others are greedy, and be greedy when others are fearful. And I feel like we were gone from this kind of speculation world to a realization world. I feel like the bigger institutions are now using this tech. They're looking at this tech. They have big teams that are researching it, using it, piloting it. And to me, that just shows how that tech adoption curve goes from kind of that early adopter to that mainstream majority, which as investors like us, that's where we want to be, right?
Yeah.
So I feel like, timing now is probably a good time to really, embrace this and look at it.
That's exciting. It's exciting. So do you
It
have
is.
any words of wisdom for someone that wants to tokenize a fund now to wrap it all up?
Yeah, I think what you do is you got to go with the folks that are doing it, right? You got to reach out to the teams out there that have done it, and there are a lot of solutions out there, the Archax guys out of London are pretty solid. The Securitized guys, we know those guys pretty well. We've made some other investments in different technologies. And I feel like that's what you got to do. You just got to, reach out. Feel free to reach out to me. Love to talk about what you're doing. Be happy to help as this whole industry really, really grows and emerge. I think it's less about the tech, quite frankly. It's more about the regulatory infrastructure, right? Do they have a transfer agent? Do they have the end-to-end solution? What holes do they have? I also feel like it's also a lot about what we've learned is about workflow. So how do that, right? You all know, right? When you deal with an investor and you're getting money in and they're wiring it in, they're sending documents and doing KYC and AML. If it becomes too difficult, you're going to lose. You're going to lose your investor. So I feel like it's really about workflow and that kind of thing. I think one of the exciting things about bigger institutions coming into this, the one thing they do have nailed is workflow, right? That's what they do. And they've been taking investors' money and delivering investing returns for 50, 100 years, right? So they've got that system down, they've got that approach down. So now they're just layering in, this infrastructure underneath. But yeah, long-winded answer to your question. Go out there, talk to the firms that are doing it.
No, super exciting. So I'm a big believer as well that everything will be tokenized and people won't even think about the technology behind it. It will just be much more efficient. But similarly, I think it will take a little while for the adoption phase. We have a tokenized fund as well of U.S. Treasuries. And so we've been through a lot of the, operational aspects to it. But we're still a believer and we would do more. So. Well, Rob, thank you so much for joining me today. Really appreciate it.
My pleasure. Absolutely.
And I look forward to, watching you as you grow and seeing what you have up your sleeve next. So
thank you. Have a great one.
Thank you.